How's it going, guys? Stas here. Welcome back to another video. Cheers, by the way. I appreciate you all for tuning in to yet again another video. And you guys see the smile on my face. That means earnings season is here, and we have to go over 10 companies, 10 stocks, all of which are reporting earnings this week that I'm watching very closely. So without further ado, guys, hit the like button, make sure to subscribe, take a sip of, well, in this case, I have a strawberry juice beverage from Trader Joe's. Yeah, pretty freaking random. But if you guys have a coffee, cheers. Whatever you're drinking, cheers. Let's dive into it, man. Again, earnings season is here, and we have to cover what's going on. By the way, hit the like button. Feel free to subscribe, do all that good stuff. Check out the links down below. Let's just dive into it. So stocks have been pretty solid. You guys know that. The market's been hot. We just hit all-time highs on the S&P and on the NASDAQ this past week, and the Dow is pretty close. But with that being said, we are kind of trading sideways a bit. Well, actually, now we're starting to break out of this channel, but we were trading sideways a little bit on SPY for the last week or two. Now we're starting to break out as of this last Friday, so keep that in mind in terms of the overall market right now. And on QQQ, heading into this week, we're actually already breaking out. So this is ahead of SPY a little bit. SPY's still kind of in that sideways channel. QQQ's not. We're starting to break out. You can see we took out the 558 resistance. We hit 563, and now we're at about 561, maintaining that resistance of the channel as support. So when it comes to the overall market, that's where we're at. We're trading at all-time highs on SPY and QQQ. QQQ starting to break out again. SPY's a step behind it, but still pretty much right there. We're looking pretty good. In other words, technically speaking, heading into this earnings season. And guys, best believe if these companies, they do well earnings-wise, if guidance is strong, we're probably going to see more all-time highs this week, maybe next week, right? It's going to be pretty. So let's just dive into it. Let's start off with, these 10 stocks. Start off with number one. It's going to be a pretty long video today, guys, so make sure you stick on throughout. At number one, we have Alphabet, ticker symbol GOOG, which at one point was my biggest stock for years, right? It's still one of my biggest holdings, just not quite the biggest one anymore. Other names have taken over that, but I am super pumped for Google this week, considering, again, it's one of my biggest stocks, and the stock's been doing very well. We can see it. Well, I guess technically we're not at all-time highs yet, like some other tech stocks, but we are making up some serious ground. Google got down to 139 back in April, and now we're at 186, so we're up about $45 from the lows, about 33%, heading into earnings, which, by the way, are on Wednesday. So if they do well, guys, if they crush numbers and guidance is strong, look at where we could be trading next. And I'll give you guys the estimates here in a second, but we could be trading in this window right here. So notice how Google is approaching a massive level of resistance at about 188, which was once support for a good 2 months back here, back in December, all throughout February, right? So in other words, if Google is able to retake what once was support at 188, now it's resistance. If we're able to retake that point, we could start then filling the gap or just trading in this window between 188, 190, all the way up to 200, 205. So really, man, if Google crushes earnings, this could be breaking out even further, right? We could run towards $200, and it's been coming, right? A long time coming, in my opinion. Google is going to be a $200 stock, whether it's this week, in a month from now, a year from now, I don't know. I know it's going to get there, in my opinion, but the question is, will it be after earnings? Let's see, man. Earnings are projected at $2.18 EPS-wise versus $1.89 from last year on revenue of $93.73 billion versus $84.74 billion from last year. That's up 10 to 11%. So Google, massive company, right? One of the biggest companies in the world, is still growing about 10.5% top line year over year, which is nuts. So keep your eyes on Google on Wednesday. Tesla is also on Wednesday. They're projecting earnings per share. Analysts see them doing 44 cents on average versus 52 cents from last year. So we know Tesla is not going to be doing very well compared to last year. EPS is going to be down, and revenue, $22.7 billion is the average estimate versus $25.5 billion from last year. That would be down 11% year over year. So expect an 11% decline in revenue for Tesla year over year. And on the charts here, guys, by the way, their earnings, I think I mentioned it also on Wednesday. On the charts here, we're noticing higher lows being made and lower highs. So we have a wedge in the making, right? And we're slightly above both moving averages on, excuse me, this 4-hour chart. You're noticing that. And we actually had a 3% green day on Friday. So we're getting momentum building up heading into earnings, but we're not fully breaking out. Not fully breaking out yet. But, big but, if we're able to break out of this trend line, do you guys see again the wedge? If we're able to break out of the wedge here, start going 340 plus, that could trigger a full-on breakout, maybe towards the 360s, 370s, right? And that'd be obviously ideal for the bulls, but we're just not getting it yet. So I'm actually watching out for that. I'm going to set my alert at 335 right now on Tesla. Let's do it right now. Mark is at or above $335 per share. So we'll see if that's able to break and again, maybe make a move north of 340 from that point. So keep your eyes on them on Wednesday. Also on Wednesday, we have Chipotle Mexican Grill. CMG's the ticker. And this stock is actually down a good chunk heading into earnings. So we hit 58 bucks, 59 almost, about a month ago, earlier in July. Now we're at 53. So we've pulled back about 8%, all while maintaining an uptrend. You guys see on CMG here, we're obviously maintaining this channel. Boom, looking pretty good. Higher highs, higher lows, the whole 9 yards. So analysts have them doing EPS of 33 cents versus 34 cents from last year on revenue of $3.11 billion versus $2.97 from last year. That's up around 5% year over year. Not too bad for Chipotle there. And honestly, it's a good setup heading into earnings. We're pretty oversold. Uptrends holding. You know, the last thing we'd want to see is a stock ridiculously overbought heading into earnings. So we're seeing the opposite now in CMG. If they do well, if guidance is strong, don't be surprised if we get a rebound here. We'll see, though. Do your own research, as always. At number 4, we have Intel. And by the way, guys, hit that like button. Make sure to subscribe if you haven't done so already. I appreciate you all for tuning in, for subscribing, following along for more. Without you, obviously, this would not be possible. So cheers to everybody out there watching. Intel is on Thursday. So their analysts have them doing EPS of a cent, a whopping penny, versus 2 cents from last year on revenue of $11.88 billion versus $12.83 billion from last year. So Intel's revenue is projected to go down about 7.5% year over year. And again, they're on Thursday, so a little bit later in the week. And Intel has been rallying a bit. The fact that we did take the highs out from the middle of May, that's great for the bulls. We're also noticing a bit of a cup and handle here. I'm not sure if you guys see it, but I see for sure a clear cup and handle here. So if Intel could really just start breaking out of, honestly, the mid-20s, 24-ish, this could be where we take off completely, right? Maybe back to the mid-high 20s from there. So really, man, it doesn't look the best, I'll be honest. But heading into earnings, we do have an ascending triangle, cup and handle. We have resistance at $24. If that's able to break, man, I'll set my alert there now. We could gain some momentum. We really could. But we're just going to have to be patient and see what the stock does at $24. So I'm going to set my alert there. Mark is at or above 24. At number 5, we have Decker's Outdoor Brands. or Outdoor Corp, whatever the heck it's called. This is the company that owns Hoka, right? A bunch of other, sneakers in that space. And their stock, man, has not been good. It's cut in half and some from where it was earlier in 2025, and they have earnings now on Thursday, and analysts have them doing 68 cents EPS versus 75 cents from last year on revenue of 901.45 million versus 825 million from last year. So revenue's growing, not nearly as much as it once was, but it's still up 9% projected year over year. Not bad. But man, that uptrend, which was once an uptrend, the stock was crushing it, guys. For a while, the stock was crushing it. That uptrend's gone. Now it's a downtrend. We've given back a lot of the gains that we saw. The stock's down over 50%. But when you pull the layers back, when in doubt, zoom out. 3-year chart looks good still. The max chart still looks good. So maybe, just maybe, this stock got a little bit ahead of itself. It probably did. It definitely did. And now it's back to earth. It's kind of been consolidating the last couple of quarters. This could be the turnaround quarter, potentially. Well, not this one, but if we get guidance that, all right, lights at the end of the tunnel, maybe we can start turning around on this stock here, but it might take a little bit. It might take another quarter or two. Who knows? Either way, keep your eyes on Deckers, DECK. Coca-Cola is another one. KO is the ticker, which has been flat for months, it seems like. Coca-Cola has been trading between $68 to $74, $75 for a couple months, and they're reporting earnings on Tuesday. EPS, the analysts have them doing on average 84 cents versus 84 cents from last year, so pretty much unchanged, on revenue of 12.55 versus 12.31 billion from last year, up around 2%. So pretty much nothing. When you're accounting for inflation, Coca-Cola revenue-wise is not growing. They're pretty much flat. Which, are you guys surprised? I'm not. Coca-Cola is not a high-flying growth company, right? So if their revenue's up 2% in a year or in any given quarter, that's pretty much what you expect out of a Coca-Cola. So keep your eyes on them, man. Not much to say on these charts other than the fact that they're trading sideways. They have been since the early days of 2025, and we are starting to bounce off the bottom of this channel, although we're still trading under the 180 SMA. So if we're able to somehow break out of this trend line, confirm a break above, let's say, $72, $73, all right, maybe a bigger rebound could come from there, but I just think there are other opportunities out there in the market that are more attractive than a Coca-Cola at this point. Not crapping on the company, but I don't know. I'm not the biggest fan of it. But we'll see on these charts what we do at $70. So keep your eyes on KO. DPZ is another one. Domino's Pizza, which I think they're tomorrow. They might be on Monday. Let me double check that. Yeah, they're on Monday. Analysts have them doing EPS of $3.96 versus $4.03 from last year on revenue of $1.14 billion versus $1.11 billion from last year. That's up 4%. So Domino's not growing much. The stock's been wonky all year. It's been flat, kind of trading sideways between 450 to about 500, and now we're at about 465. Not doing much. And we're fighting to get back over these moving averages. Maybe if Domino's Pizza can break out of, let's say, a 475, 480, maybe it runs to 500. That could be the play there, but we're just not there yet. Keep your eyes on DPZ. LUV, Southwest, is another one. So we have some airlines this week. Southwest been actually doing very well. The stock hit $23 back in April. Now it's at 36, so they're up a lot. Earnings for LUV are on Thursday, and analysts have them doing 52 cents EPS versus 58 cents from last year on revenue of $7.3 billion versus $7.35 billion from last year, down about 0.75% year over year. So LUV is not looking great year over year. The stock price is looking good, but that worries me a bit. If they suck in terms of the earnings, right? This stock could drop like a brick. Let's see what American Airlines is looking like. They're also on Thursday. This one's way more beaten up, so there could actually be more potential in AAL compared to LUV, at least in the short term. As we're seeing, AAL has not been doing well. The stock's slowly creeping back up, though. But let's see. Their EPS estimate is 76 cents versus $1.09 from last year. Oof, that's not good. On revenue of 14.27 versus 14.33 billion from last year, down 0.4%. So don't expect anything big out of these airlines, guys. At least LUV and AAL, they're both down year over year compared to last year's numbers. Maybe they're just tough comps this quarter, this go around. But yeah, not looking great for those two. And let me see the last stock on the list here, guys. By the way, if you stuck till the end, thanks for tuning in. I mean, this video is longer than the usual content. Let me know if you enjoy longer content in the comments. By the way, hit the like button, subscribe. And, oh, by the way, have you joined my email stock newsletter yet? I send out my top stocks weekly for free right to your email. And check out my Patreon. If you guys haven't joined that yet, I post my real-time portfolio updates weekly on Patreon, where I'm investing thousands of dollars a month in that portfolio, and I'm showing you guys how to grow it. Shameless plugs linked down below. And now let's dive into the last stock, which is Lockheed Martin. So we have some defense companies this week. Another one's Raytheon, which I'm not going to talk too much about here, but Raytheon's another one for this week. But keep your eyes on LMT on Tuesday. This stock's been not looking great. Been flat all year pretty much. Actually slightly down from where we started the year. But LMT's on Tuesday. Analysts have them doing earnings per share of $6.57 versus $7.11 from last year on revenue of $18.58 billion versus $18.12 from last year, up 2.5% year over year. Not bad, but obviously not the best. Pretty much keeping up with inflation, just like Coca-Cola. But if somehow they surprise, guys, guidance is strong. Maybe we get momentum out of, let's say, $485 a share. That could be where the overall breakout comes, especially over $500. But are you seeing it getting there? I'm not seeing it yet on these charts, guys. So we got to be patient. So, yeah, that's pretty much it, man. 10 companies, 10 stocks, and we can go on another 30 minutes. We have, 10, 20 more that we could talk about, but those are the 10 main ones I'm watching for this week. What do you guys think? Let me know your thoughts in the comments. Do you own any of these? I'm curious. Hit the like button. Feel free to subscribe. And with that being said, cheers. I'll catch you all in the next video.